Okay, quick update on the stock market technical analysis. We'll look at these tech stocks, tech charts. A few interesting things I want to point out today. It won't be that long of a video. If you're finding value, please drop me a thumbs up. It does help the channel. I do appreciate it. If you're interested in getting additional trade ideas, additional market insights, I do post to a private member group. You can find the link in the description of this video below for that private member group. It's like $5 a month, so feel free to join up if interested. Okay, triple Qs, guys. We have this tech stocks. I'm looking at the daily chart here. We do have a sell signal. There is a breakdown. So let me show you what we've got. On the daily chart here, we have a bearish rising wedge. We have negative divergence on both momentum indicators. Okay, so that's the setup. That's the bearish setup. We had a breakdown. If I roll out and look, this is the breakdown here. Kind of the initial sell signal right before NVIDIA earnings. NVIDIA earnings came out. They gapped this thing right up, rallied it back up into the trend line, just marginally, basically a kind of a marginal recovery. And it did, let me double check. Well, we did actually make a new high a couple days ago right there. Intraday, we made a new high. That was a divergent high. And so far, since that divergent high, they've been selling into this thing. Now, not impulsively. They definitely have not. There's not been impulsive selling, but there has been selling. So keep that in mind. So that's what we have. And the other thing that we also have is this looks like almost like a false recovery because we're back below that trend line. So all these reactions here, there's another one, even there's one, even the gap up right there. Lots of reactions on that trend line, and yet we've drifted off of that support line. We're kind of just drifting sideways right now. Looks to me like they're waiting for, I don't know, maybe this PCE reading. It's an inflation reading that comes out. That should come out tomorrow before the bell. So possibility for a gap down, I guess. If we do gap down, then definitively that would be a sell signal. This bearish rising wedge would have basically been broken, back test, and downside. So I'm still viewing this as kind of a sell the rip market. We did obviously when we recovered right here on the day of the NVIDIA earnings, it didn't look, it looked like they had recovered the support line. So I said to everyone that until they fail back below the trend line, there's no reason to essentially add to shorts for sure. And if you're short, you could have given it a little room, but in general, no reason to add. But now we've drifted down. So it's not impulsive enough for me to say it's time to add. I think if we get that gap down, I think that's going to be the signal that we are starting a downtrend. Okay, so you break, you rally, and then you take out the lows, and ultimately we start a downtrend that will be obvious to all once the downtrend is obviously well established. As of right now, it's not obvious to all. So that is what I'm seeing there on the NASDAQ. Let's look at the futures. They look kind of the same. Here's the NASDAQ futures. On this one, you can see the daily chart, NQ. Support, I got a support, there's another reaction, support, there's a couple right in there. And then again, we have a breakdown, a sell signal, we have a back test, 1 day back test. They did recover the trend line one day. Very next day, they were up above the trend line but failed. And so far, we've been holding kind of this resistance. We're back below that trend. So this uptrend is no longer intact. And until that's recovered, to me, it looks like we are rallying into resistance. We're likely going to start a downtrend. All right, so that's what I see. Maybe we want to backtest again. That's always possible too. We could pop up and do another backtest. Okay, IWM, I don't cover this one too often, but this is the small caps. I've heard a lot of commentary online and stuff about, now they're looking for the IWM to play a catch-up rally. Maybe it does, but again, IWM, the small caps, has been relatively weak for quite a while. Here's the all-time high in the IWM, and we're well off those highs. So triple Qs, which is essentially just a handful of stocks, has made new highs, whereas the Russell 2000, which is 2,000 small companies, is well off the all-time highs. All right, so that's something to take note of. On this one, you do have a potential bullish divergence here. Well, it's not really bullish divergence, actually. I apologize. We've been rallying. You know, the IWM is obviously walking up. It has, I think, a very similar trend line here, and momentum's been moving higher. Maybe they pop it, put in a divergent high. That would be a divergent high if it happened anytime soon. You know, I don't know. But here's the thing about IWM. I think the largest component of IWM has now become this SMCI, because SMCI was in the small caps, but the market cap exploded, causing this to become the largest component of there. So we'll look at that one. And again, this is just AI hype, AI thing. Now, I'm currently short this one. Here's what I've got on it, and here's how I'm trading it. So, you know, we basically have an uptrend line on the daily, all right? We have a big reversal candle right here. That's a big bearish engulfing outside day, okay? So that's very critical. That's a key component to the trade setup. And we are, you know, we had follow through, rallied into resistance, all right? That's the trend line, hit resistance, and selling off. So it looks exactly like the triple Qs. I mean, these are basically all trading the same. And so here's the thing. To me, it seems like it's going to roll down, sell down to support, which is about 360.88. But it, you know, I don't know. They could pop it back up into this resistance, all right? A daily close, I really don't want to see a daily close above 1,400 or 1,046.87. It can be just a couple pennies, fine. That's fine. But any kind of clear daily close, a definitive daily close above that candlestick negates this as a reversal and a top. And so that's it. I set my stops slightly above there, you know, up around the 1100-ish. You know, I definitely, you know, maybe not that high, but you set your stops up above. Just, you don't want to just get clipped if they trade it up in there intraday. You want to have your stops on a daily close really above there. You stop out, all right? And otherwise, this should hold as the top, and we should continue to work our way lower. Risk reward, it's a great trade. Doesn't mean it's going to work, but the risk reward ratio is definitely there. If I really line it up, it's not objective to take a trade right here and now because you're not near any key levels, but let's say you took it on the breakdown, on the reversal at the end of the day, okay? The top of the candle where you'd stop out at is roughly 30%. All right, it's a 30% move because you remember this thing, that reversal was a massive move. Okay, so if you waited to the very end of the day, which I didn't, I jumped on it a little bit early, but if you waited till the very end of the day, you need to be willing to ride out a 30% move against your position. All right, and it's already moved 20% on this big gap up, so that's a 30% possible loss essentially if you were to stop out slightly above there, maybe about 35%. And then the gain potential would be all the way down here at this profit target, way down here at 358, which is about a 50% gain. So pretty good risk reward ratio on that one. And so yeah, that's it. Another one that's very similar that I also like, has the same kind of setup. Another kind of mania. This is just a momentum stock on the drug that they have, the Ozempic or Uzet. I don't know how you pronounce it, but and so, you know, it's been rallying really strong, but we do have a bearish engulfing candle right here. So again, same trade. If they rally it up, you get a daily close above that bearish engulfing, you stop out. Again, it needs to be a definitive close above there. Otherwise, we should continue lower. I have a potential trend line that had a lot of reactions in the past. That trend line's kind of been violated. They held it here from resistance, but they recovered it. So, you know, maybe we need to see this trend line break as well for, you know, to add to the trade. This one, home builders, again, these are all tied to interest rates, so we'll cover those. But this one looks pretty top heavy to me. It's consolidating for sure. So you can kind of box in this range right here. Resistance is, you know, top of that range, support down below. And so that's, you know, there's no definitive sell signals. It does have momentum just cratering, essentially, just dropping way off. So keep an eye on that because that's a big negative divergence. Sell signal, if you wanted to wait, you know, you probably need to take out these lows right here. I got it about 99.50 or so. Take out those lows. You should just roll down to about 85.58 for the next level of support. And so, yeah, that one, it looks like it's topping. We don't have any definitive sell signals. These are obviously interest rate sensitive. So we look at the TNX, the 10-year, and they're kind of doing the same thing, consolidating right here. It is consolidating just under resistance, which is about 433. So usually when you see consolidation just under resistance like that, it's building momentum to pop it. All right. And if it pops, that's going to be a spike in interest rates. You should see the market really starting to take notice, especially tech stocks, if interest rates do spike. So keep an eye on that. No guarantees that happens. We need to, I'm kind of just waiting for that to see if it shows up. And I'll point it out to you guys when or if I see it. And I'll just wrap up here with Snow. So Snow just reported earnings, it looks like, after the bell today. No, there's no trade here. Obviously, I really just want to kind of point it out. You have, on this one, a clean uptrend line. All right, lots of reactions on kind of support. You have negative divergence indicating that this trend is likely going to reverse, but there's no sell signal. And what we're seeing in the after hours, this thing's down 24% right now. Likely maybe overblown to the downside post earnings, but the trend's been broken. And what it really points out is when a market wants to actually break trend, when everyone's loaded long on a trade, it usually doesn't give the bulls an opportunity to exit a trade, to exit the long trade in a nice, clean fashion. So I would be pretty surprised if we see something like triple Qs just start to break support levels intra-market and just start to break and allow everyone to see the break and then get out of the trade. And I'd be pretty surprised if we see that. What I think would be more common and more expected would be some sort of a gap down that traps people, doesn't give them an objective opportunity to exit their trade, and then equally doesn't give short traders an objective opportunity to jump on board. Okay, so something like this where you see Snowflake, the trend, trend traders who say, hey, the trend's your friend, stick with the trend. All right, so that's what they say. You've got support. You have divergence, but a lot of people will just ignore it to say, why would you, who cares about divergence? You're going up. Trend is your friend. And then earnings comes out and you're down 24%. The trend's no longer your friend, and pretty much overnight you're underwater in a massive way. So just something to look out for. Doesn't mean it's going to happen. I just would be surprised to see triple Qs just kind of roll over when everyone's kind of lopsided and most people are bullish. It doesn't usually give everyone a clean exit. All right, I'm going to wrap it up here, guys. Check out the private member group if interested, and we'll pick back up tomorrow. Take care.